All right. Welcome everyone. So during today's webinar, I kind of want to talk about something that I don't think actually gets addressed very often. Um, I find people that when they get into their careers, um, they don't really think about, what type of investor are they? You know, um, Usually people end up going into whatever their friends are doing, or maybe if they work for a company, it kind of leads them into a different type of investment, or whatever their family is in. But with each type of investment, there's different requirements when it comes to, risks, the amount of effort you have to put in, um, also what the reward will be, what are your returns going to look like. And I find that what people are investing in doesn't always match what they personally feel would be best for them, or they don't even think, is there different options that I could do? Maybe there's a different investment type that's best for me. Now, obviously, you guys know that I'm in real estate and I'm a real estate investor, and that's where I felt is the best fit for me. But I thought it'd be really important to kind of have this conversation where, you know, what kind of real estate investor are you? So what I want to do, and please, people, don't take this as gospel. There is so much more to each investment type. All I'm doing is doing a super high level, sort of my personal thoughts on what I feel about each investment type. But within each one, you should do your own due diligence, do your own investigation, and find out, is this truly for you? I'm just kind of going off sort of what my feelings are. And some of these I really haven't looked into that deeply because they don't interest me. So, but I thought, hey, I'll do a little presentation, do a webinar here, and make people think, make you have a little bit of a conversation with yourself about, what type of investor are you? So the first thing I'd like to talk about is, what type of investor are you? Um, it's really important to ask yourself, what am I looking for out of my investments? Okay, so if sorry, I don't, I'm trying to be very careful with my words here. Um, if you're looking for a certain type of return, or you want to put in a certain type of effort, there usually is a different type of investment category you should be in. Also, what are your resources around you? Who do you have to help you? Like, if you have a brother that is a let's say, deals in stocks, then you have somebody that's a good resource for you because they've already gone through that. Maybe they're a stockbroker. So, I think you really have to have a conversation about what type of investor are you. So let's go through these really quick. Okay. So the first thing is, you really have to have a very honest conversation with yourself. So the first thing you want to know is, what's your tolerance for risk? So each type of investment has a different risk level. Okay, and we're going to get into that. But a very basic one is, like, if you put your money into your bank account and just let it sit there, that is an investment. It's usually a savings account. You're going to get a very minimal return, but the risk tolerance is pretty low, because the chances of you anything happening to that are extremely low. And depending where you live, often it's protected. Now, if you go into crypto, for instance, it's super volatile. It's super high risk. Um, but obviously, that also comes with how you educate yourself with crypto, because I'm sure there's people out there that are in crypto that are saying it's not that risky because you have to know about it, which is the same for every type of investment. But I think for the average layman out there, crypto is considered high risk. So you need to have a real honest conversation with you, is, what's my risk tolerance? And also, depending on how much money you're looking to invest, maybe you choose to put some of it in high risk, some of it in medium, some of it low, diversify your portfolio of where you're putting your money. But whatever money you're putting in, you have to make an honest assessment on, what's my risk tolerance for that? How much free time do you have? Depending on the investment, it's going to require more of your time. if you work a full-time job, you don't have time to be, watching stocks on the market, being highly invested. Whereas once again, I'll go back to the savings account. You don't need to do anything. It's an extremely low time thing, but you're also getting an extremely low return. So, you've got everybody has a life. You have to basically make again your own personal honest assessment of how much time am I looking to put into my investments. Is it going to be my full-time job, right? If so, then obviously you have a lot more time, you're going to put a lot more effort in. If you already have a job and you want to do something on the side, once again, that changes. Maybe you're about to have kids and start a family. You're going to lose a lot of time. So maybe that changes the kind of investment you want to be in right now. Maybe you move from something that requires a lot of work and a lot of management to something that's less. So this isn't a one size fits all. Your risk tolerance is going to change. When you're younger, your risk tolerance may be higher. As you get older, your risk tolerance may lower. Same thing with time. So whenever you're thinking about your investments, you want to kind of match it to, what's my 2-year, 5-year, 10-year plan? Where do I want to put my money? Because not everything has to be in the same investment. How much effort? So this is the thing. So there's one thing about the time, okay, but there's also the effort. So how much actual effort are you going to put in personally to manage that investment? Now, if you're doing stocks or mutual funds, etc., you may be working with a broker or an investment advisor and having them do the heavy lifting, and you're just managing that person. But once again, how much do you want to manage them, right? Because, do you have a conversation with them weekly? Are they that type of investment, advisor? Some of them, they only want to talk to you once a year. So depending on how much input you want to have into what's going on, you have to realize how much effort you have. Time is one thing, but effort is another. If it's something you can do for an hour a night and it doesn't take much work and you're just kind of checking it out and managing it sort of from afar or online, that's different than that hour having to be you being somewhere or being on site or being active with more effort, right? So time and effort are different. What kind of return do you need? So how much money are you looking to make? If you're at, let's say, towards the end of your career, or you're about to retire and you just want something to kind of make you some extra spending money, you've kind of already got your savings, you're in a good spot, and you just want to make some extra spending money, some travel money, and maybe it's also just something that's an interest for you. You kind of want to keep yourself active and be out there and keep your mind working and have some investments so you have something to occupy more of your time. It's completely different than maybe to someone that's young and just starting out and has to grow their entire career, and they need to really, like, especially these days, it's so hard if you're working a 9 to 5 job to buy a property, get ahead. So maybe you need more of a return, so that's going to require more of your time, more effort, a higher tolerance for risk, to get that bigger reward. So these are all questions that are very personal, and I always find it funny when people, say, this is the absolute way to do it, or this is the only way to do it. You have to judge each thing. And also, just like I said before, all of your money doesn't have to be in one type. You can have low risk, low effort investments, and you can have high risk, high effort investments, right? That's basically what's called diversifying your portfolio is diversifying the areas that you're putting your money, not only based on the types of investments, but obviously your risk tolerance, your time tolerance, etc. So let's go through a few types of investments. Now, like I said, guys, I'm going to be really high level here. I just want to make you think, okay, that there's other stuff out there, and to see, and at the end, I'm going to tell you guys why I chose real estate over all these. I do have other investments, but my main work is in real estate, and I'm going to tell you guys why. It may be different for you. My goal here is just to educate and help you guys and just spread some knowledge. So make your own choice. So let's go through some common investor types. So there's a stock investor. Now, stocks are very exciting. They are, live to the second. You can watch your stocks going up and down depending on what your time investment is. If you're not going to hand it off to somebody that is a stockbroker and have the management, you want to do it yourself. You see often on TV these guys with 6 screens set up. and they're watching all the different stocks, and they're in there, and there's so many movies where you're on the stock trading floor. Obviously, that's more online these days. But it's very exciting. It's very fast paced, very high stress, and it's a lot of effort. If that's something that excites you, then it's definitely a great path to go on. I mean, you see out there how many people are successful in stocks, but what you usually don't hear the conversations about are the people that lose a lot of money on stocks. I'm sure you've heard in the news of people that have basically lost their entire fortunes overnight because of a stock market crash, right? And that is a very real possibility. So when it comes to stocks, the risk is high. Now, I'm going to preface this again. You can manage risk within stocks. Okay. I'm just talking from layman's, from the outsider, the average person that doesn't have, the knowledge. Stocks is a very high risk. The effort is also high unless you're going to use a stockbroker. Okay. But then they're going to be taking a cut of the money you make. Whether you win or lose, they take a cut. Okay. So from that standpoint, if you don't want to put the effort in, if you want effort low, your return on your stock investments is also going to be lower because you're paying someone to manage that work. Nobody does it for free. But if you are willing to put in the work and put in the effort, your return can also be huge. Okay. So stocks is kind of basically the high of everything. Now, I say it again, there's different, ways of going about it, but in general, I think if you asked anybody, that's kind of how they would rate them. A bond investor. So bonds essentially are a more stable investment. You end up with a more predictable return. They don't cause as much stress. The returns, though, are typically not as high as stocks, because the risk is lower with a bond, your effort is lower, your returns are lower. And this is pretty common. I don't know of any really investments that are low risk, high return. Okay. That's mythical. And if that was out there, that's what everybody would be doing. I know there's high risk investments that are low return. Why you would do those, usually people get tricked into them or they don't educate themselves and they get themselves into trouble. So yeah, if you like the idea of being involved in stocks, but want something that's a little less stressful, bonds are a great choice. I do not know a lot about bonds, but I know that a lot of people choose them as essentially one of the kind of investments they have in their portfolio. They put some money that they want to keep safe and they don't mind that it earns less of a return. Um, and that's why they would use bonds. Now, mutual fund investor. So essentially what a mutual fund is it's essentially a bunch of stocks. So you're diversifying yourself within stocks and bonds and putting them into one fund. So there may be, let's say you're in one that's a tech mutual fund, and you may have Apple, Google, Nvidia, and all that kind of stuff inside there. So if one of them does well, it does improve your mutual fund. But if the other two do worse, overall your mutual fund could go down or up. It's kind of the average of all of the investments within that fund. Um, they're a lot easier to manage because you don't have to worry about the individual performance of each company. But once again, it's something where the return is usually a little bit better, in my personal opinion, than a bond. It's lower risk, lower effort. Um, but it's kind of I have a lot of stuff that I put into mutual funds, and that's kind of my rainy day stuff is there. Okay. I don't put all of my money in one thing. Some people do, some people don't. That's just the way I choose to do it because I like to kind of have some safeguards to where I put my money. Let's talk about savings account. Okay. This is about as low of a risk, like I talked earlier, that you can do. Your return is also about as low as it can be. Um, some people do this. They just have essentially their emergency nest egg is sitting in a savings account. I personally wouldn't do that because there's a lot of other low risk investments, even with mutual funds or bonds, where you're going to get a higher return than you are with the savings account. Um, Often the benefit with a savings account is your access to the money can be a lot faster. So if you need to access that money, you just want to kind of put it somewhere until you need it. That would be one of the reasons I would choose a savings account. But if you can put that money away, even for 3 months or 5 months or 7 months, there's different investment strategies you can use to safeguard that money and make more of a return than your savings account is. Savings to me is essentially the lowest of the low choices when it comes to any type of investment type. I don't even personally, hopefully I don't offend anybody, I don't even think you're really an investor if you have your money in a savings account. Crypto. This is, the new kid on the block. Not that new, but it's what gets all the hype these days. Now, crypto is insane. There are humongous swings. I personally, many years ago, got offered Bitcoin, and I was told, I think back then it was like $100 a Bitcoin. It was ludicrous. I still remember this. This was like, I don't know, 20 years ago. I didn't believe in it because it's something that I couldn't see. It was just this fake thing. So I didn't believe it. I was wrong. Obviously, now it's come a long way. It's had humongous swings, but there's a lot of volatility. So if you're somebody that's okay with that and you kind of want to ride that roller coaster, um, it, obviously there's a lot of people that have made fortunes on it. But I feel like it's got a very high risk. It doesn't take as much effort unless you are really trying to like maximize that return. Crypto in my mind is basically the same as stocks. I just treat stocks as essentially a different type of crypto. The only thing with crypto is there's no tangible asset. There's nothing you can go get. You're not investing in a company that exists that you can go knock on the door, talk to the CEO. Um, I'm definitely not an expert in crypto. I have very little money in crypto. I just have it in there for fun. Um, but yeah, I mean, it's sort of the new kid on the block as far as investing goes, but it's very exciting. So yeah, look into it. I'm sure a lot of you know about it, but it can be something that's very fun. But once again, it's in my mind, it's very high risk. Okay, once again, guys, my personal opinions. Um, Private equity, venture capital. Now, the preface with this is you need to have money already to do this. A lot of those other investments that we talk about can vary based on how much you have to invest. You can start with a small investment and still play the game. When it comes to venture capitalism and private equity, what that means is essentially you are investing in startups or private companies. You're giving them money to hope that they grow. Okay. It can be very cool because you get to see a company that starts from essentially nothing. You invest in them and you see them grow, and that's how you get a return on your money. There's many different ways to skin the cat. You see, Dragon's Den is probably the most common way people understand. They go there, they present their idea, and they ask the four dragons to invest in them, basically, become a capital investor and help my company grow. The only real big downside to it is you need typically a lot of funds in order to be in this game because somebody's not looking to get an investment of $100. When it's, I don't even know if there is, I'm sure there's companies out there that do sort of low dollar private equity venture capital where you kind of pool your money with a bunch of other people that are lower dollar amounts. I have been involved in a little bit of this. I'm definitely not an expert on it. And it's pretty exciting. We did okay on it. Our return was it was pretty low risk, the one that we did, and our return was equally pretty low. Like I said, it's pretty rare that you go into a low risk investment and get a high return. But if you're somebody that has a lot of capital sitting around, there's things that are called angel forums where you'll have people come present to you. It's a great business to look into, and it kind of can be, if when I'm later in life and if I have enough money set aside and I'm lucky enough, this is something I would love to go into. I would love to find someone that's, young or starting a new business. And if it's something that I'm passionate about, I would love to invest in that and help them grow because I just think it would be something fun. But where I am currently in my life, I don't think it's something that actually really works for me. But I think it's a really cool type of investment. Now, what if you want it all? So we talked about, okay, you've got to figure out what's your risk tolerance. How much time can you allocate? What's your how much effort do you want to put in? What kind of return? In my mind, there's really one type of investment that allows you to do this all within the same skill set. So if you want to be able to manage your risk on each investment, you can actually, with the same skill set, you can do that. You can change your involvement based on where you are currently. You don't have to learn about a whole different type of investing platform, because when you get into this business, this type of investing, you can actually change how much involvement you want depending on the people you put in place. And as you build this type of investment portfolio, your network will grow. Other thing is you can really match your return to your risk. So if you need to do something that's lower risk, and you don't mind a lower return, similar to if you're doing, a mutual fund, or maybe even a sale. I'm not going to say a savings account, but bonds or something like that. Um, this is kind of gives you the ability. So this is part of the reasons of why I chose real estate. Okay. One of the first big reasons is it's one of the longest acting types of investment. Okay. It's one of the oldest, the most reliable. Okay. Yes, you can have the huge swings in it, not as fast as you would in crypto or stocks, but pretty fast. I mean, there's some parts of the world where in the last couple of years, the real estate, you know, values have skyrocketed. And if you were in at the right time, you won huge. Um, and the really great thing is it's probably one of the things that's also the most stable. Okay, because it involves people's homes, governments are really careful about there being huge real estate drops, because it would kill, basically, well, not kill, but really hurt the population and cause, catastrophic effects to the country, province, city, state, whatever. So it's really protected. The other thing is there's a lot of safeguards in this industry, through, real estate agents, through mortgage brokers, through the banks. It's a very regulated industry. So from that standpoint, I find like it's one of the safer ones. The other thing is there's a lot of information about the ways to go about real estate. That's what I do. I share my information about how I do this. So that's one of the reasons when I thought about which way I wanted to go, it was really about this is one of the oldest ways to go about it. Okay. Um, One of the cool things with real estate is even if you're doing a long-term investment, in general, real estate is always going up. Yes, there's dips, 100%. But if you look at it over the last 100 years, it's been on a climb. And that's because, number one, there's only a certain amount of land. Okay. On Earth, there's only a certain amount of land. Now you go into your city or state or province, whatever. And, for instance, I'll take where I live in Vancouver. There is really no more land. You can't go west in Vancouver because you hit water. So there's no land that way. You can't go north in Vancouver because of the mountains. It's really kind of contained, right? You can't go south because there's the border. So the only way you can go is east, which is where it is going. But the land that's in the main part of Greater Vancouver, obviously over the last few years, or basically, we can even go further back, has appreciated a lot because it's a finite resource. People don't think about that, but in general, people want to live in the same area or certain areas. Obviously we are often rated one of the, the top 3 places in the world to live. So the real estate here has a great amount of value, and there isn't more of it, right? The last reason is it's a tangible asset. Okay. Stocks, yes, they're tied to a company, but you don't have anything in your hand when you have a stock. Okay. Maybe you have a stock certificate, but really that's only worth the paper that it's on. It's, if it's not assigned correctly. Crypto, another thing, there's nothing, there's no tangible asset. If you lose your crypto key, whatever, or your information, or somebody can steal it, it's gone. There's no way to trace it. It's gone forever. Um, Real estate, you have a piece of land that you own, okay, or you have an apartment, or you have a townhome. You know, for me personally, obviously, I like land and houses and things like that. You can live in your investment. You can rent out your investment. I just find there are so many different opportunities within real estate that that tangible asset to me is just it's comforting. Maybe I'm old school, maybe I'm low risk, but I just that's one of the reasons that the fact that it's one of the oldest types of investment. Um, it kind of has its own built-in appreciation because there's a finite amount of land. Obviously, that's why crypto is also the same thing. There's a finite amount of crypto, from what I know. Obviously, not as an expert, and it's a tangible asset. That's a huge thing to me. I'm sitting inside, my home. That's an investment. So I'm getting use out of it, and it's an investment. So to me, that's kind of win-win-win. So the last thing I really want to go in here is with any type of investment, okay, you have to educate yourself, plan for it, and then execute it. You have to do that. So with any of them, join a community, okay? I don't care if you're going into crypto, stocks, whatever. Obviously, real estate, we have a community, pre-school, right, where we get people together. But you have to be around people that are experienced if you've never done it. You've got to learn from someone. You need a mentor or something, okay? Take courses, watch YouTube, read books, whatever. But if you're going to go into a type of investment, I mean, if you're going to put your effort in, then learn about it. Okay. Don't trust a stockbroker. Okay. Just learn about what the business is so that when you can ask the proper questions, it's so important. All right. Don't just blindly trust somebody with your money. Okay. Set clear goals. Okay. So you have to define what you're expecting out of your investments. Okay. You got to, what we talked about, what's your risk tolerance? How much money are you looking to make? If you're looking for a low return and like I said, you're almost you at retirement and you just want some spending money or you just want to do something on the side for fun, as opposed to your day-to-day job, but you really don't need a lot of extra income and you're not looking for it. Everybody's different, right? Not everybody's looking to be a billionaire. um, then you want to match your investment to that. So it's really important that you kind of set a target and be honest with yourself, people. Okay. Be really honest about how much you want to risk, what your effort's going to be. Everyone in the beginning gets excited and wants to put a lot of effort in, but make sure you match how much work you want to put in. Okay. This is another reason why I like real estate is you can simply buy a property, live in it. That's the type of investment. Buy a property, rent it out. It's a little bit more effort, but you kind of get a little bit more of a return. Or you can flip condos, which is definitely more effort, but it's a higher return. It's a faster return. And in my mind, it's probably the thing that's as close to a low risk, high return investment there is because what we teach you, and if you come to the previous school you'll learn about this, is how to mitigate those risks when you're doing those flips. Okay. um Last one is do your due diligence. Okay. Whatever type of investment you're going in, I've already talked about this. Get around like-minded people, get in a community, um and have conversations. You're going to need a network no matter what. Okay. If you want to learn about where the best deals are and what's coming up, whether it's stocks, bonds, crypto, it doesn't really matter. You have to be in a community of other like-minded people so that you can be in the know. If you're the last one to know in your type of real estate investment, let's even take, or sorry, your type of investment. Well, let's take real estate investment. If you're the last person to know when the market is turning around, obviously you're going to have the least amount to gain because you're at the end. Whereas if you're in a group of people and everyone's like, hey man, yeah, my place that was not selling just sold. I just went into another property and I put in an offer and it was multiple offers. The market is really turning around. You're going to know, oh, wow, if I'm looking to buy and I'm getting in, I better do it now because in a month from now, the prices are probably going to be up quite a bit, right? You have to be around these people in those conversations to know. Okay. So surround yourself with the right type of people. Um, I hope everybody found a little bit of value in that. I was just having conversations or a conversation with somebody the other day, and it's just, they wanted to get into real estate, and I was just asking them kind of why. And it made me think, I wonder if people actually ever ask themselves why when they choose to come into this business. I shared why I I personally got into it. But just think about the other stuff that's out there. Look, see what's best for you. My personal opinion. Obviously, I'm one-sided here, as I believe real estate is the best way to go because you can vary so many parameters. But if you have any questions or anything, guys, um, please, come over to Priya School. Join us at priaschool.com. It's free. Ask any questions you want. I'm always there. I'm always happy to help. Um, Talk to the other people in the group. Everyone was always out there to share their knowledge and learn about it. Maybe it's not for you. Well, who cares? It's free. Come in and just look around and learn a little bit. But hopefully, you guys found this helpful. And we'll see you on the next one.